You check your bank account on a Wednesday afternoon, not because you're worried, just habit. You make $108,000 a year. You've never made more money in your life. You have a good job, a decent apartment, a car that works. You contribute to your 401k. You don't carry credit card debt. By every measure your parents taught you, you've made it. And yet, you're sitting there staring at a balance that feels thin. You do a quick mental inventory, rent hit last week, car payment, student loans, that dinner with friends on Saturday. Nothing crazy, nothing reckless. So why does six figures feel like you're barely keeping your head above water? You tell yourself what you always tell yourself. Once I hit 120K, things will feel different. But here's the problem. You said the exact same thing when you were making $65,000 and $80,000 and $95,000. The number keeps going up. The feeling never changes. That's not a coincidence. It's math, and the math is rigged against you. My name is Mark, and I spend an unhealthy amount of time obsessing over the invisible math that quietly decides who gets ahead and who stays stuck. This video is not about budgeting tips. It's not about investing strategies, and it's definitely not about working harder. This is about a subtle accounting error baked into modern life, one that explains why people with good jobs, good habits, and good intentions still feel financially exhausted. Here's the belief most of us grow up with. If you earn more money, you'll eventually feel ahead. A good salary equals security, raises equal progress. Stability comes from doing everything right. This belief isn't naive. It's logical. It's reinforced by parents, employers, and society itself. But it's also wrong. Not because you're irresponsible, not because you're bad with money. It's wrong because it ignores how modern life converts income into obligation. Let's run the real numbers. Meet Sarah. Sarah is 32 years old. She lives in Denver. She works as a product manager at a mid-sized tech company. She earns $108,000 a year. On paper, Sarah is crushing it. That's $9,000 a month gross. But before Sarah touches a single dollar, the deductions begin. Federal income tax takes roughly $1,400. State tax takes another $400. Social Security and Medicare take $690. Her 401k contribution takes $540. Health insurance premium, $280. After mandatory deductions, Sarah's $9,000 becomes $5,090. That's her real revenue. Now we subtract the obvious costs. Rent, $2,100. Utilities, $180. Car payment, $420. Car insurance, $140. Student loans, $380. Groceries, $450. Gas, $200. Phone, $85. Subscriptions, $60. That's $4,015 in fixed monthly expenses. $5,690 minus $4,015 leaves Sarah with $1,675. $1,600 of breathing room. That sounds okay. Not great, but manageable. But this is where most people stop counting. And this is where the math breaks. Because Sarah doesn't just spend money, she spends time. And time has a cost that never shows up on a bank statement. Let's count what no one counts. Sarah's commute is 35 minutes each way. That's 70 minutes a day, 5 days a week. Over a year, that's nearly 375 hours sitting in traffic. But the commute doesn't start when she gets in the car. Sarah wakes up at 6:15 to shower, do her hair, put on makeup, and dress in clothes that signal professional. That's 45 minutes of unpaid labor for her employer. At night, she needs at least an hour to decompress, to scroll, to watch something, to let her brain recover from 9 hours of meetings and Slack messages. Add it up, 45 minutes of morning prep, 70 minutes of commuting, 60 minutes of decompression. That's 2 hours and 55 minutes of hidden job time every single day. Over a year, that's 725 additional hours. On top of the 2,080 hours she's officially at work. Sarah isn't working 40 hours a week. She's dedicating 54 hours a week to her employment. That's 2,800 hours a year, but we're not done. Because time pressure creates money leaks. Sarah buys lunch twice a week because she didn't have time to prep. That's $35 a week, $1,820 a year. She orders delivery on Thursdays because she's too drained to cook, another $2,400 a year. She pays for a house cleaner twice a month because weekends are her only recovery time, $3,600 a year. She buys the more expensive, closer parking spot because she can't handle the extra 10-minute walk, $1,200 a year. She takes an Uber to the airport instead of asking a friend because she doesn't have time to reciprocate favors, $400 a year. These aren't luxuries, they're taxes. Taxes on being too busy to live efficiently. Let's add up the hidden costs. Convenience food and delivery, $4,220. Cleaning service, $3,600. Parking premium, $1,200. Time-saving transportation, $400. Work clothes and dry cleaning, $1,800. Coffee and snacks, $1,040. That's $12,260 a year in costs Sarah only pays because she has this job. Now let's do the real math. Sarah's take-home pay after taxes and deductions, $68,280 a year. Subtract her work-related costs, $12,260. Her true annual income, $56,020. Divide that by her true annual hours, 2,800. Sarah's real hourly wage, $20. She thought she was earning $52 an hour. She's actually earning $20. And here's where it gets uncomfortable. That $20 an hour is before her rent, before her car payment, before her student loans. Once you subtract what it costs Sarah just to exist in her current life, her real discretionary hourly wage drops to single digits. Every purchase now has a different meaning. That $200 dinner with friends, that's 10 hours of Sarah's actual labor. That $1,500 vacation, that's 75 hours, almost 2 full work weeks. That $45 takeout order on a Tuesday because she's too tired, that's not convenience. That's 2.25 hours of her life she'll never get back. This is why 6 figures feels like poverty, not because Sarah is irresponsible, because the math was hidden from her. This isn't Sarah's fault. It's structural. Here's how the trap works. When Sarah made $65,000, she lived in a cheaper apartment. She drove an older car. She existed at a certain baseline. When she got promoted to $80,000, something shifted. The neighborhoods she could afford got nicer. The cars she deserved got newer. The restaurants she frequented got pricier. The clothes she needed got more expensive. This isn't lifestyle creep in the way people usually describe it. Impulse buys and splurges. This is ambient cost escalation. The zip code that matches your income has higher rent. The car that signals your professional status has higher payments. The social circle that forms around your salary has higher expectations. Every rung of the income ladder comes with a new set of baseline costs, and those costs are calibrated almost perfectly to absorb the raise before you feel it. The system doesn't need you to make mistakes. It just needs you to do exactly what you're supposed to do. Buy the house you can afford, lease the car that's reasonable for your income, live in the neighborhood that matches your job title. And then you look up, 10 years into a career, making twice what you made before, and feeling exactly the same. The treadmill isn't a metaphor, it's an economic mechanism. Here's the mental model that changes everything. Stop measuring wealth by income. Start measuring it by the gap between what you earn and what your life costs. A person making $60,000 with $15,000 in annual expenses is wealthier than a person making $150,000 with $145,000 in annual expenses. The first person has 25% of their life available. The second person has 3%. The question isn't how much do you make? The question is how much of your income do you actually keep? Most people optimize for the top line. They chase raises, promotions, title bumps, but the top line doesn't determine freedom, the bottom line does. Every dollar of expense you add is a dollar you have to earn, but it's worse than that. Because of taxes, every dollar of expense actually requires $1.30 or $1.40 in gross income. And because of time costs, every dollar of expense requires even more hours of your life. That gym membership isn't $150 a month. It's 8 hours of life after you account for real wages and taxes. The cable package isn't $200, it's 11 hours. The new iPhone isn't $1,200, it's 65 hours. When you translate money into time, clarity appears. The question stops being, can I afford this? It becomes, is this worth the hours it will take from me? There's no dramatic escape from this trap, just quiet, strategic moves. First, calculate your real hourly wage. Take your actual take-home pay. Subtract every cost you only pay because of your job. Divide that by your true hours. That number is your real wage. Use it for every purchase decision. Second, decouple your lifestyle from your income. The goal isn't to live like you're broke. The goal is to break the automatic link between I earn more and I spend more. When you get a raise, don't upgrade. Keep your expenses fixed for at least 1 year. Bank the entire difference. That gap between what you earn and what you spend is the only thing that compounds. Third, reduce fixed costs before chasing higher income. Freedom comes from lowering the floor, not raising the ceiling. A $500 reduction in monthly fixed costs is worth more than a $6,000 raise because the reduction is tax-free and permanent. Cancel the subscriptions you don't use, move to a slightly cheaper apartment, drive the car for 2 more years. Every dollar of fixed cost you eliminate is a dollar of freedom. Fourth, protect your time margin. Time pressure creates money leaks. When you're exhausted, you order delivery. When you're rushed, you pay for convenience. When you're stressed, you buy comfort. The cheapest financial decision you can make is having enough time to make good decisions. Guard your time like it's money, because it is. The lie isn't that you're failing. The lie is that 6 figures was ever supposed to feel like success. In a system designed to absorb income through ambient cost escalation, making more money doesn't create freedom. It creates a higher cost version of the same trap. The person making $50,000 who keeps $10,000 is freer than the person making $200,000 who keeps $5,000. Wealth isn't what you earn, it's what you don't have to spend. Once you stop measuring success by the number on your paycheck and start measuring it by the hours of your life you actually own, something shifts. The treadmill doesn't disappear, but you finally see the off switch, and once you see it, you can't unsee it.